Good afternoon, everyone, and welcome to our webinar today. It's great to have you here with us to take part in this webinar. Today's topic is about the R&D tax incentive and around capital access in relation to R&D funding. I'm delighted to have with me today my colleagues speaking. Let me just check my slides are working. Sorry. I'm delighted to have with me today Pat Stewart from Radium Capital and his colleague Samara Chandran, also from Radium Capital. Before we kick off, a few bits of housekeeping and reminders. The webinar is going to be recorded and will be made available to all participants who have registered after the event, along with the related materials. There'll be a Q&A session at the end of the presentation, so please do put your questions into the box located at the bottom of your screen. In addition, we're excited to have a prize for the best question asked, so please ask some good questions and we'll follow up after the event with a winner, as well as a lucky draw prize, a virtual lucky draw prize, of course. The webinar will run for approximately 1 hour. There'll be 20 minutes of presentation on the R&D tax incentive and relevant updates, as well as 20 minutes from Radium Capital. In this event, all participant and attendee lines will be muted. So as I said, please put your questions into the Q&A box. Further to the event, and for further information about the speakers and the topics we've discussed, or about RSM, please visit rsm.com.au. As I mentioned, today's event, there will be 3 speakers: myself, Jess, Olivier, National R&D Partner at RSM Australia, Pat Stewart, State Manager for New South Wales at Radium Capital, and Samara Chandran, also State Manager for Queensland at Radium Capital. So let's get started in terms of the presentation. I wanted to give you a few updates around the R&D tax incentive. As you will be aware, the program's been around for a long time in some form or other, and we're approaching the 10th anniversary this year. So I wanted to provide some relevant updates in relation to the programme. But first, a bit of background about myself. I started out as a chartered accountant and tax advisor in the UK about 21 years ago now, and have now over 15 years of experience in purely R&D tax incentives, assisting startups, small to medium-sized businesses, and large multinationals as well to claim the R&D tax incentive across a wide range of sectors. Myself and my team, we work with companies to prepare and lodge R&D claims from start to finish, the end-to-end process, and with the goal of delivering a defence and robustable claim. We will help you identify correctly and claim the R&D activities in your business to optimise the R&D refund available to you. In addition, we've worked with a variety of companies over the years, including technology, that's fintech, educational technology, health tech, etc., across pharmaceutical and biotech, construction and engineering, and manufacturing. So in terms of the benefits and takeaways from today's session, and as per our agenda, first of all, I'll just run through the recent R&D tax incentive programme changes. I'll also discuss the key areas of regulatory focus. We'll look at correctly identifying eligible activities and the associated expenditure. And I'll also touch on potential industry-related government grants that might be available to your business. So the first part of the presentation, as I mentioned, is around the R&D tax incentive and recent programme changes. So the key headline, I suppose, is around the increased benefit for R&D tax claimants. You'll be aware from the recent COVID federal budget that the rate for R&D tax incentives claimants is changing. So assuming you've got a base rate entity and your turnover is less than 20 million Australian dollars, aggregate turnover, so that's the global turnover of the group, you'll see that there's a 43.5% refundable credit, which has been in place for a number of years, as you may be aware. So in terms of how that's increasing, you'll see there that 43.5% is made up of a 27.5% corporate tax rate with a permanent additional benefit there of 16 cents in the dollar to bring you to 43.5 cents per dollar benefit for the 19-20 year. For the year just finished, 30 June 2021, with the corporate tax rate reducing to 26% for base rate entities, there's a permanent additional benefit if you're in a tax payable position of 17.5%, again to give you that 43.5% R&D tax credit. And then going forward, as I mentioned, as part of the federal budget announcements last October, they have decided to decouple the R&D rate from the corporate tax rate to provide a permanent 18.5 cents benefit above the corporate tax rate at that time. So in all those changes, that the 43.5% benefit remains for base rate entities. However, that additional benefit, given the corporate tax rate is lower, is actually increased, which is positive news for the R&D programme. If your company has a aggregate turnover of more than $20 million, sorry, that should be more in that the top of that headline there. So for companies with greater than $20 million, it's, as you know, prior to 1 July 2021, it was a 38.5% non-refundable R&D tax offset. So the permanent benefit to your company there is between 11% and 8.5%, depending on whether you're paying tax at a 27.5% rate or 30% corporate tax rate. If your company is in a tax loss position, that refundable element doesn't exist. However, you can carry forward that benefit into later years and it can be utilised against future taxable income, assuming the integrity measures are met. And again, in the COVID budget, they announced increased measures for companies with greater than 20 million turnover. So there's going to be a new intensity test, which basically speaking means that your R&D intensity is going to be calculated based on your R&D expenditure in the year over your total expenses in the year per the income tax return. Now, the first 2.5% of the R&D intensity will attract an 8.5% benefit, which is similar to what's been offered in prior years. But where the increases come in this tier is 2.5 for companies spending more than 2% R&D intensity, they're going to attract a much higher benefit of 16.5 cents. That's really a generous benefit for companies in that second tier. Obviously, it's difficult to forecast the exact permanent benefit you're going to get going forward in this 2022 year onwards. However, you can see that obviously the benefit is generally going to be higher, and we can certainly do modelling on your prior year claims to give you an idea of the benefit you're going to receive going forward. Just one thing to note that for 31 December year-end companies, this is effective from 1 January 2022. So in terms of the administration of the programme, again, as you may be aware, there's two bodies that look after the R&D tax incentive. So under Innovation and Science Australia, we've got AusIndustry as the delegate, and now they're purely concerned with the R&D eligibility of the activities that you're undertaking. And as you may be aware, you lodge the R&D application form with AusIndustry within 10 months of your year end. Their role, if in the event of a review, is to assess the technical and scientific eligibility of the work that you've been doing, and obviously provide guidance on that following that review. The Australian Tax Office looks after the expenditure side, and their process is that you calculate your eligible R&D expenditure and you lodge that expenditure with the R&D schedule as part of the income tax return. And again, in the event of a review, they will assess whether the relevant taxation rules have been met and ensure that the R&D expenses that you're claiming have a direct nexus to the R&D activities that you've registered with AusIndustry. This is particularly relevant in terms of the updates that we're going to provide. So firstly, in terms of AusIndustry, and as you may be aware, there's been a lot of scrutiny on the programme in the last 3 to 5 years, and part of that scrutiny has resulted in this new integrity framework or user journey that you can see here. This is broadly as a result of the Ombudsman report and the Morton case, which both had positive ramifications for the R&D tax incentive programme. Now, in terms of the scrutiny, as I said, you may be aware, there was a lot of media press releases around companies like Airtasker, Commonwealth Bank, etc., being under review. And the Kate Carnell, who acts for the Ombudsman in Canberra, Small Business Ombudsman in Canberra, commissioned a report into the tactics, I suppose, or the behaviour of the administering authorities of the programme, which ultimately resulted in 24 recommendations that the authorities have taken on board. Now, from AusIndustry's perspective, this is their new user journey, and you can see there that they now have a more engaged process with the R&D claimant. In terms of R&D application forms that are lodged, they aim to look at every single application form and categorise it per that traffic light system you can see on your screens. So green, getting it right, you receive a letter of registration. Amber, you're trying to get it right, but you're not quite there. You might receive some further correspondence from AusIndustry, be that in the form of guidance materials or potentially an education visit. Or they might categorise it as red, high risk, and they believe it does not comply. And in that case, you'll receive further correspondence from AusIndustry. They'll meet with you to discuss eligibility issues, and that could lead to a further statutory assessment. So that's just to be aware of the process that they're now going through and their goal of looking at all 13,000 plus R&D claimants. Again, you may be aware that the R&D tax incentive has a new claim process as of 1 July 2022. On the 5th of July, they lodged their new online portal, which a lot of us as advisors have been involved in the beta testing of this portal, and obviously trying to make it easier to lodge your R&D application form. So rather than the PDF smart form that you may be previously familiar with, they have a new online lodgement portal, which you access through MyGov. You need to provide your R&D tax agent with authorization to access the online portal and lodge on your behalf in the event that you're using an R&D advisor. You also need to use this portal to lodge extension requests, advance overseas findings, and any other information that you want to request from Oz Industry. It's your means of communication with them, really. They've introduced hard character limits, so there is now a stricter word count on the application form, but they've also removed the ability to add attachments, photographs, diagrams, etc. And I suppose the key reason for this is that they want people to be really clear about their eligible core R&D activities and focus on how they meet the eligibility criteria rather than providing reams and reams of excess information. There's a requirement to complete a checklist of documentation on that form, so that's claiming, disclosing that you maintain records to substantiate the eligibility of the R&D activities that you're undertaking, although at that stage there's no requirement to provide those documents. As I mentioned, there is that renewed focus on describing the existing sources of information and the knowledge consulted to prove that you needed to undertake experimentation to prove or disprove the scientific concepts and the hypothesis that you set out to resolve. So moving on to the second part of the presentation around key areas of regulatory focus. Again, just talking through this will be around the areas that Oz Industry and the ATO are looking at. As a bit of a refresher, I'll just remind you of the claim process. As I mentioned before, it's a retrospective claim process, so your claims have to be lodged within 10 months of your income year end. And as I often say to people, it's not a grant program, it's a tax credit, which is slightly different in that the program is self-assessment. So a company self-assesses with the assistance of an R&D advisor whether the activities they're undertaking are eligible and how those activities meet the criteria, along with assessing the eligible costs associated with those activities. So you self-assess and lodge your application form with Oz Industry within 10 months of year end. So for 30 June 2021, this must be lodged by 30 April 2022, if not sooner. You lodge via the R&D online portal now, which I mentioned, and lodge the R&D application form to register the eligible projects and activities. Once this is lodged and within a couple of days, you receive a registration number, and this is included in the company income tax return on the R&D schedule, which discloses the R&D expenditure. And again, just to reiterate, that number is a registration number, not necessarily an approval. And per that integrity framework I put up, the authorities can come back and review your claim within a certain time period. And I guess the critical part of the claim process is to make sure you've got that documentation and evidence for technical and financial support. So you must maintain this throughout the process of undertaking R&D, have documents to support the technical work that you're doing and how it meets the eligibility criteria, as well as financial support to show how the costs that you're claiming have that nexus to those registered core R&D activities. So moving on to the compliance landscape, and I guess this is just giving a bit of a snapshot about how the program has evolved over the last 5 years. As I mentioned, the program itself in its current format of the 2 tiers of 43.5% credit and 38.5% credit have been around for 10 years, since 1 July 2011, so we're on the 10-year anniversary basically. The only changes to legislation in that time, bar the recent introduction from 1 July in that 10 years, was the reduction of the rates by 1.5 cents in the dollar. And as I said, there was a lot of media focus around the 2016 to 2018 period about Airtasker being hit with reviews, CBA having a review as well in terms of the size of their claim, and then obviously sort of negative headlines around tech firms having to pay back their R&D dollars, which was pretty negative for the program and for the reputation of the program. As we move into 2019 and into 2021 now, we're seeing certainly a more positive landscape. The Ombudsman report, which I mentioned, which was commissioned by Kate Carnell, and the recommendations in there that the authorities have taken on board have been very positive. There have been a number of cases, including Morton and PKWK, which have had positive results for the taxpayer in those instances, and again have affected how the R&D criteria may be applied. There have also been cases around companies under review which have ultimately had their findings reversed and have been eligible to claim after all. So again, a pretty positive landscape compared to what we were looking at a few years ago, notwithstanding that companies still need to be careful around the registration of their activities and the eligible documentation that they have. So just in terms of the 2 authorities, Oz Industry and the ATO, and looking at how we identify eligible activities and expenses, I thought I'd just go through these slides to give you a bit more background on the recent areas of focus and discussion points that we've been having with the authorities. These are slides that I bring up quite a lot on most of my presentations, but I do think it's relevant just to reiterate what they're looking for in terms of the registration of the R&D claims. So in terms of the actual what is an eligible core R&D activity, you can see here that this is the legislative definition per the R&D provisions. So when registering an R&D project, you need to make sure you can identify at least one core R&D activity, or a future core, happening in a future year, that is an experimental activity, so that it involves testing and trialing. That the outcome of the activity cannot be known or determined in advance. That's based on current knowledge or experience in that field of science, and based on a competent professional in the field's perspective. It's conducted for the purpose of generating new knowledge, and that might be in the form of new or improved products, processes, technologies, etc. And it can only be determined by a systematic progression of work, and that's one which starts with a hypothesis that you set out to prove or disprove, an experiment where you went to undergo testing and trialing, as I mentioned. You went through a process of observations and evaluations to ultimately come up with logical conclusions. And so interestingly, talking to our industry last week, they did mention that in terms of the definition of the generating new knowledge part is often the easier part to prove that you're generating new knowledge. The harder part is actually demonstrating that the outcome of your activity cannot be known or determined in advance. So once we've got a core R&D activity, then we can also claim supporting R&D activities for the same financial benefit. Just to mention in terms of core, before we go on to supporting, there are a number of excluded core R&D activities in the legislation, which you'll see here. Those typically based on market research, management or efficiency studies, social sciences, behavioural studies, as well as things like sales promotion and consumer surveys. The details of the excluded activities are listed here, but one thing to be aware is that whilst they are not eligible core R&D activities, in some cases they can still be supporting R&D activities when they're undertaken for the dominant purpose of supporting a core R&D activity. That is, they're providing input into the core R&D activity rather than for example, a commercial basis or a commercial operation. In terms of what's eligible supporting R&D activity, so this is a type of activity that is directly related to one or more of the core activities that we've identified. So you could not undertake your core R&D activity without doing the supporting R&D activities. I've talked previously about the excluded core R&D activities on the previous slide. However, there are things that can be included as supporting, such as background research, initial design phase, concept design, detailed design, that sort of thing. The formulation of the hypothesis that you set out to prove or disprove prior to actually doing the experiments. General project management activities, data collection, consultation with experts in the field, and the development of the prototypes prior to testing. And again, feedback from our R&D claimants over the years has been around supporting documentation and how do you identify and support those activities that you're doing. So they did mention Oz Industry recently that they launched new guidance on their website from the 10th of May. This includes fact sheets, podcasts, videos, etc. So have a look on there if you want more guidance around whether your activities qualify. And in addition, they're constantly revising their guidance in relation to software R&D. So there's some draft guidance available now as well from, I think it's April 2021. And I suppose to give you a practical illustration of the types of documents that you should be keeping, and again, there's no exhaustive list for this, but I suppose thinking about it is what type of things would a layperson need to understand the activities and how they meet the criteria, which I set out previously. So here there's a number of examples of software R&D documentation that would support the work that you're doing. And as I said, the key is to have that nexus from the documentation back to the R&D activities that you're registering. It's all very well to be doing the best R&D in the world, but if you can't support that, then it's hard for the authorities to see what you've been doing. In terms of the costs that can be included, again, pretty much the starting point for most R&D claims will be around the R&D hours spent on the R&D activities, so wages and salaries based on the hours spent on those activities. There'll be other items which are directly related to the R&D activities, so this could be testing costs, software, hire of equipment, etc. We typically would see contract expenditure as well. That might be subcontractors, specialists, consultants that you use, third-party consultants that you're using. Depreciation on plant and equipment in R&D activities can also be included, and I'll touch on that a bit later. Also, other expenses that are directly related to the activities, such as travel, training, conferences, as well as an apportionment of project overheads that are needed to be spent to undertake the work. So that might be admin staff needed to run your business, or your rent, electricity, etc. But again, feedback from the authorities has been They continue to look at R&D expenditure calculations where there's a large refundable claim or a very, very high claim, and even non-refundable, and they will look at salary amounts, how they've been calculated. They'll look at the overhead allocation methodologies, and sometimes there might be one method that's more appropriate than another, such as, you know, hours over R&D hours over total hours, or floor space for an R&D facility versus total floor space. And they also continue to look at payments to associates and overseas costs as an area of focus. So I guess just in terms of additional considerations around funding opportunities, which obviously Radium are going to touch on, the COVID 2020 budget, which I mentioned last October, they announced some really generous rules around instant asset write-offs and accelerated depreciation. So historically, you could only claim depreciation for the portion of time you used an asset in R&D activities, but the new measures allow you to take advantage of the full expensing measures. And again, these were extended in the federal budget 2021 to 30 June 2023. So just to wrap up my presentation, and I've sort of summarised on the next couple of slides before I hand over to Radium, there's a couple of other grant funding opportunities which you should be aware of and should have a look into. The first one is other federal government grants and incentives, which includes the Accelerating Commercialisation Grant, the Export Market Development Grant, the Modern Manufacturing Initiative, and the Early Stage Innovation Company incentives, all listed here and summarised on this slide, and I'd be happy to talk to anyone about these potential opportunities as well. Finally, in terms of some state-based grants, I was speaking to some colleagues in at an accelerator program last week in Queensland around Ignite Ideas Fund for Queensland. There's some grants there available for sort of that post proof of concept stage. And in New South Wales, there's a minimum viable product grant, which provides 50% match funding up to a maximum of $25,000 for the development of a minimum viable product. Again, some good ways to kind of inject some cash flow into your business at the same time as undertaking your R&D. That's it from me in terms of the R&D tax updates. I'll now hand over to Pat and Samara to give you a bit of an overview of the access to the capital arrangements.
Perfect. Thank you, Jess. Thank you, everyone, for allowing us to have a chat. Hopefully, everyone can hear us clearly. My name's Pat Stewart. I'll just bring up my slide and share my screen. So hopefully that works. All right. Perfect. All right, well, I'll jump straight into it. And Jess and the team at RSM, once again, thank you so much for the opportunity to have a chat this afternoon. I was very much looking forward to it. One of the things that I had a look at before we met together was the client charter of RSM. And I think that spells out that relationships based on deep understanding of what matters most to our clients, and more importantly, the power of being understood. And that's why it's so important when we partner with firms such as RSM that we don't only just provide financing, we're ensuring that we're providing an offer to RSM's clients and any of the clients that we work with that make sure we become a clever part of their capital mix and their cash flow. Before I go any further, I'll quickly introduce myself and my background. If you want to have a look further, please join and invite yourself to reach out and connect on LinkedIn with myself. But I have a background with Westpac and Allianz in client account management and in regards to commercial financing. Last year, I finished my MBA, which was heavily innovation-based, and with my partner, we purchased a small business in the middle of COVID and realised that getting cash for small businesses developing isn't always as easy, and the banks can be pretty strict in regards to what they do. So looking into ways to solve that opportunity, I found Radium. I've been with Radium nearly 6 months now, and we look to continue to help businesses throughout Australia as they continue on their R&D journeys. So if we have a look at some of the slides that we've got here today, we were launched in 2017. We're a small group of entrepreneurs that were going on our own R&D journey and looked to see how we could further develop that and assist other companies, not only just in Perth where we started, but across the country. We now are owned, due to some of our successes, by a US hedge fund, Radium Capital, which is over $2.5 billion now. I should have updated that slide. And that's really allowed us to do a couple of things and really explain why and what we do. We've helped over 300 clients across 20 different industries, which is equaled up to $250 million in R&D financing. Having a look, we've assisted RSM clients with over 150 individual financing opportunities. And we've made sure that our clients aren't just clients that speak to us once, they speak to us multiple times, either for financing from a previous financial year or throughout the year. So what we do and why Radium could be relevant to yourself is we help businesses advance their R&D tax incentive. It's all we do. We help them get access to their money sooner without taking their capital before they've turned their business into something bigger. And we don't hold on to that equity. We don't hold a security over all of their business, not allowing them to get any other capital. We become part of the capital mix for those businesses. And what that means is that through our service, which we've provided nearly 1,000 times, we can make sure that we are confident and simple and efficient and provide an end-to-end digital experience for our customers. What that allows us to then provide in the way of a benefit for our customers and our clients is a strategic use of their capital. And that can be done two ways. It means that they can hold on to their money and not have to spend as much of the money that they have in their reserves and allow them to spend the same amount on research and development, or we can help increase the amount of R&D spend without having to take more finance elsewhere. We're helping you borrow money based on the money that you're already receiving in the form of the R&D tax incentive. So it becomes two strategies there. Receive the same, but keep a bit more cash in the background and boost up those cash accounts when you're looking at things like capital raises or trying to make the business the best version of itself. Or the other hand is looking to turbocharge R&D and get closer to commercialization sooner. Now, how we do that, I'm going to hand over to Samara and she'll take you through what that could look like in a real life example.
Oh, I'm on mute. Hi, sorry about that. My name is Samara Chandran. I'm the Queensland State Manager for Radium Capital. My background has primarily been with corporate finance and corporate banking. Primarily have been working in North America, but have had the opportunity to work in Europe and in Australia now. So it's been really exciting to support clients who are doing R&D and also provide non-traditional financing. So just wanted to talk a little bit about examples of how we do that and share a client example as well. So let me just see. I think, Pat, you might need to click through for me. Thanks, Pat. So just on a standard R&D refund model, typically in this example, you'd spend your $250,000 in the first quarter and expect to receive a refund at the end of the year. And that's typically what happens. You spend and then you receive a refund at the end of the year. But if you want to use strategic use of capital to sort of increase your R&D spend, we can help with that. So just click on the next slide. In the same example, your R&D expenditure could be $250,000, but because we know that there's going to be $108,000 in a refund that will happen at the end of the year, we can provide $87,000, so 80%, like an advance against your refund upfront. So now you have $87,000, and you can put that into R&D again. If you decide to do that in quarter two, just on that slide here, you'll have an additional refund, an additional amount for your refund. So additional spend, additional refund. So again, we can lend another 80%. In this case, it'd be 30 grand. So in quarter three, you can put that back into R&D, and then additionally, you'll have more funds from us as we lend again. So as you sort of cycle through the year, your spend increases from 250,000 to 378,000. So that's quite significant. And your refund also increases from 108,000 to now 164,000. So even after the borrowing costs, your refund will be 144,000 in your pocket. And how we've set it up is that all the interest is capitalized, so your cash flow will be protected and you'll have more funds in your pocket. So I'll just move to the next slide here. So one of our clients actually used this quarterly model, and it benefited them for their R&D project. So the client is Recce Pharmaceuticals. They are a large ASX listed company. They're a biotechnology company that focuses on the development and commercialization of antibiotics. So what they were looking to do was essentially scale up the manufacture of their antibiotics and then be able to supply across the globe. And typically what companies will do is sell their shares and raise capital that way. But by working with us, so using that quarterly model, they were able actually to increase their R&D spend. So I'll just go to the next one, if that will. So they were actually able to spend their R&D throughout the financial year, utilize us, and maximize their investment. So they increased their R&D spend by 33%. And they also increased their refund by 25%. So they had an additional refund of $200,000 after all of the borrowing costs. So the next slide just shows essentially what that looked like. So that's quite a big jump. They had a budget of 1.9 million. That's initially what they were going to spend in R&D. But by using us and cycling that cash through the year, they were able to increase their spend to 2.4, almost 2.5 million. And then their refund as well increased. So they went from 805,000 to almost 1.1 million. And what's really exciting is that they were able to get to market faster. They were able to scale up quicker, access revenue faster. And we noticed that during this time, their share price actually increased as they were, scaling up and spending on R&D. And just wanted to also mention that we finance not just on a quarterly basis, we provide financing on a monthly basis or as needed basis. It's really how, our clients require their funding for the R&D. And Pat will talk about the process of how we support clients do that to, access capital effectively.
Awesome. Yeah, thanks, Samara. I think that demonstrates how useful this could be for your business. And I hope you're thinking, how do I do this? What does it look like? What's the process? Is it easy? And is it fast? And the answer from my buyer side, but many of our customers have said that, is that it is quite easy and quite fast. All we require is 6 documents that give us a snapshot of your business. We're not going to be looking into your cash flow and into all your things like that. We're using your R&D tax incentive as security. And then we're just asking for a little bit more information, including from RSM, to make sure that you're eligible and you're going to get that money back. And then we can help you plan what those steps look like. We'll review that and we'll provide an answer within 48 hours in regards to your approval. Once that's received, we will then ask you to sign the documents online, provide your ID to tick it all off, and then you will receive those funds 72 hours afterwards. So from end to end, we can have approvals in clients' bank accounts within 3 business days. So some of the key features that we offer to make sure that it is matching the needs of the business rather than just providing finance is that we're providing an advance, as Samara said, of 80% of the R&D refund. And we can provide that at frequency to match your needs. Now, we're allowing either businesses to invest up to 150% of your R&D expenditure, or up to 50% of your R&D refund can be increased or reduce the amount of capital that you need to spend by 33%. And we can help you by providing some insights into what some of those numbers look like, but always would suggest to speak to the experts such as RSM. An ATO repayment is what repays the loan. They pay it off directly to Radium. And the way that we can do that is take first ranking charge over your R&D refund. As mentioned, our approvals are quick, and we're able to do that because we have quite standardized documentation and a process, and we recover that through our low $699 plus GST flat establishment fee. And then our interest rate is 15% per annum or 14% per annum for any repeat loan. Now that works out to be 1.25% per month or 1.16 per month. And the reason I share that is because we don't charge our clients any penalties for paying off their advances earlier. We're not interested in charging our clients huge amounts of interest. We want to work with our clients on a consistent base to be part of their strategic capital mix and ensuring that we can help them turbocharge their research and development. So in summary, we help businesses from all sizes grow, from loans as small as $7,000 up to a facility that we did recently of $20 million. And that was linked to bringing forward arrangements that Jess mentioned in her presentation in regards to R&D and depreciation. So definitely have a chat to Jess and her team about that if that's of interest. We help you can keep control over your business by the way that we look at your security and the way that we provide access to your R&D tax incentive earlier. And you don't need to risk everything. We're going to treat your R&D tax incentive as an asset, and we know you're going to receive that. We're just helping you use that sooner rather than having to wait till when you file your tax return. And finally, we make this an easy process. We don't want to keep you in your rooms. We are all spending enough time inside at the moment. We want you out there doing your R&D safely, of course, and due to the health regulations. But we want to make sure that you're spending your time on what you guys are passionate about, and what we are passionate about is helping you do that. So if you'd like to reach out, here are our details for all of our members across the state. Please reach out to your direct state manager. However, if you come through to one of us, we'd be more than happy to help and then direct you accordingly. But that's it from us at the team at Radium. Thank you so much for your time. I'll hand back over to Jess and the team, and we'll go through some questions. And I'll stop sharing. Yeah, how do I do that?
Pat. Thanks, Samara. So maybe might be an opportune time to run through the questions that have been coming through. I'll just start with the ones that are here now. So the first one from Kim: were the figures quoted in the case studies for Radium after interest fees?
Yeah, so we provided the funds, and the refund and that you actually get back is actually for after the interest rate. So we only show the numbers plus net refund. I think that's what they're asking about. So the interest, yeah, it's after the interest is charged.
Yeah, I think I did see on your slide, it did show the
yeah, after borrowing costs.
Great, thank you. Thanks, Samara. In terms of the question, does receiving the cash flow up front prevent you from applying for the government grants outlined? From my perspective, no. There's receiving any type of funding from Radium would not prevent you from applying for any grants. The one thing there is you do need to consider is there's a clawback provision in the R&D legislation for when you receive a government grant or recoupment. So again, it adds a little bit more complexity to your R&D calculation where you've received government funding in relation to the same costs, and I suppose that's to stop companies from double dipping. But certainly you can still apply for Radium financing. It would just be based on numbers that take into account what you've also received as a grant. Does that answer the question? Has anyone else got any questions they wanted to ask? Whilst the chat box is open, or the Q&A box. We had a couple come in previously, so perhaps I'll just have a look at those. So I guess I'll give a couple to you guys at Radium. Can you just outline a little bit around what the application criteria is for Radium financing?
Yeah, sure. So we asked for 6 documents, and then from there we are a digital online portal, which makes it very easy, and we work with clients as they require that. Those 6 documents are: 1, a letter from yourself, Jess, and the team at RSM, basically telling us that you're comfortable with the R&D, that it's eligible, which is a good thing to do, not just from our perspective, but it means you're checking in with your R&D advisor throughout the year. The second is a letter from your tax advisor, who may or may not be RSM, but they're just advising us if you have any disputes or anything outstanding with the ATO, and they just make sure that when they submit the return that we're the first ranking charge. So basically the loan gets paid off directly to us from the ATO. And the other 4 documents are very simple. They're copies of your BAS statements. It's a copy of your last tax statement if you've got one, so we don't need it for startups, and a copy of your registration with Oz Industry. So those last few documents are something that we can always put together quite easily. And if you're working with RSM throughout the year, and as I said, we've helped nearly over 150 positions for clients. We know exactly what we need from each other, and it makes it a really seamless, fluid transaction for all the clients.
Okay. Thank you. Thanks for that. There's a couple more questions on here. In terms of Radium, how does Radium differ from its competitors? in the market?
Yeah.
There you go. Chance to talk yourselves up.
Great question. I'm sure Pat and I both will say a couple of things, but from my perspective, we have been doing this for a while, and this is all we do. So our lending has been very strategic in the way we do it, and our technology and platforms provide us an ability to turn things around really quickly. And Pat mentioned that we are also, backed by a large hedge fund, so we are well capitalized, whereas other competitors may not be as well capitalized. So we have the funds to support our clients. Pat, did you want to add anything else?
Yeah, I always just talk to security, and the way that we view security genuinely is a lot different to our competitors. It's something just to keep an eye on, but it allows us and puts us in a position where we do positions such as one I did in June for 4.5 million. We didn't take a security hold over that business, and they were allowed to do a $20 million plus capital raise in August. And it was also something that Recca used with us to help their cash business and cash flow before they listed. So we don't become a capital requirement. That means we're the only one you can use. It means you can use us in conjunction with VCs and other traditional means, which a lot of our customers find very helpful.
Cool. Thank you. Thanks for that. I'll just run through a couple more questions that are just popping up now. So I think these ones are for me. What are the triggers for an ATO audit? Number of years claiming, size of the refund. So that's an interesting one. I suppose from my perspective, having done this for a long time, I don't think the number of years of making R&D claims is too much of an issue from an ATO perspective. The size of the refund can certainly trigger a review. We do see pre-issue checks where there's a high 6-7 figure refund potentially being processed by the ATO. They have a bit of an integrity check in their systems where they see that, and they come back with initial questions which they want answered before they will process and approve the refund. So certainly that can trigger it. As I mentioned, there's a few areas of concern for them at the moment around payments to associates, salary costs if they see, for example, round percentages rather than people tracking their hours. They do look at overhead allocations, but that comes at post the during the pre-issue check. So on the face of it, certainly the size of a refund, there might be some other history with the company that can make them look at an R&D claim. There might be a general compliance review, or it might be some sort of disclosures that they picked up on the R&D schedule. So hopefully that answers the question. The other question on the chat box is interest expense on an R&D loan an eligible R&D expense? So no, interest is ineligible per the R&D ATO guidance, so that you can't claim interest expense on R&D loan or any other types of bank interest as an R&D expense. If anyone's got any more questions, do please put them in. There was one I was just going to ask the Radium guys, because I get asked this quite a lot as well. So obviously, just in terms of the Radium loans, who is actually eligible for the financing pattern, Samara? So I've obviously spoken to both small claimants under 20 million and larger claimants over 20 million turnover. Can you just elaborate on who is actually eligible to apply for R&D financing?
Yeah, I might take that one. And once again, Samara, please jump in if you want to add anything. It's the clients that are receiving the rebate that are eligible. From a cost perspective, we've provided loans as small as 7 million and as large as facilities as 20 million. And that's when people have arrangements in regards to depreciation over a number of years, and we can help set up those facilities as they depreciate those assets over a number of years, or we've got advanced bindings. So we often say it's those clients that have a rebate coming in, so we can borrow against that, and we know that that money is coming through. But that being said, if clients are larger amounts and they need to carve out, when they're not the non-refundable part, I would always send them back to RSM to have that chat, and we can work and see if we can. It's not always a no. We'd send that advice back to you guys. But the majority of our clients, well over 90%, would be that those that are receiving a rebate.
Yep. And is there a minimum size as well? It's probably a question that comes up quite a lot too, that you'll finance against.
There's not, but it's always something just to keep in mind in regards to fees and costs associated with doing so. But we'll support any business. The lowest that we've done is 7,000.
Great, thanks for that. Is there any other questions coming through, or did you have any questions from attendees?
Yeah, we always get the same questions about overseas employees. So people ask us if costs paid to an Australian company, if some of their employees are based overseas, can that be eligible? How does that work?
Yeah, that's a good question. And again, I hear that a bit too. So as I said, probably mentioned before, the program is basically a location-based test, and it's to reward R&D done in Australia. So technically, you can't actually pick up costs for labour you might be doing somewhere in a cheaper jurisdiction because they're half the cost of the labour here. Obviously, the idea is to reward labour here in Australia. So yeah, question I do get is around, would the company that's invoicing us is Australian Proprietary Limited Company, but actually technically, and if the ATO were to look into it further and they found that you were picking up costs for overseas labour, then that's not allowed. And again, that's one of the, as I mentioned previously on the slides, that's one of the focus areas for the ATO at the moment, is overseas expenditure being claimed without a finding in place. Any other questions that have come in to you guys?
Well, I know one thing, Jess. I know that list for the best question prize is pretty short, so you've got a pretty good chance of winning that at the moment.
I don't think I'm allowed to actually. We'll go through the questions at the end and work out the best one and announce the prize in a follow-up email. So thank you for that.
My question that I always get, we obviously speak to a lot of clients at an early stage, Jess, and a lot of them say, look, take me through what's the benefit an R&D advisor can provide versus me just putting it in myself. How do you answer that when you speak to your clients?
Yeah, that's a fair question, because I obviously understand that at the start, particularly for a startup, cash is king, and they don't want to be spending money on advisors where they can avoid it. But then I suppose my answer to that would be, as advisors, we're there to help you claim correctly, to identify eligible R&D activities based on the legislation, to identify the correct R&D expenditure with that nexus to the R&D activities. And I suppose hopefully using an advisor like us will help you maximise that. And in terms of our fees, hopefully the value you get out of using an R&D advisor will pay the benefits back in an increased and optimised R&D claim. Similarly, as I mentioned, you don't want to get picked up for a review. So if you're not doing it correctly and you get a review by either Oz Industry and the ATO, that can become a really long and drawn out process, and can also expand their remit for the ATO, for example, from beyond R&D into other areas of your tax affairs. So really, it's just about making sure your claim is defensible and robust, and that you're claiming correctly.
Yeah, I think that's a really good point. And without providing advice from my end, we've seen clients that at that earlier stage have started with $10,000 advances through Radium that have grown over a year or two. And now we're doing advances as high as 800,000, $1 million with them, because they got the advice early. They weren't missing out on things that they could claim. And they were using someone like us to help get more cash flow into their business sooner. It meant that they were able to get that R&D accelerated rather than spend 6 months waiting for the next allotment of capital to do another trial. So we've definitely seen that in action, and it's a lot of the customers that we speak with who use us over and over again have really appreciated the partnership that we have with someone like RSM. So I can definitely second those comments.
Absolutely. And I guess one other point to mention is that we do have those great relationships with both Oz Industry and the ATO. We often reach out to them to confirm positions taken or technical positions, whether something is eligible, if it's a bit out of the ordinary. And that's a really good position to be in, where we've got that collaborative relationship with both Oz Industry and the ATO. I'll just see if there's any more. We've got another few more minutes before we wrap up. Maybe one more question for you guys. Oh, someone's just mentioned, R&D financing sounds too good to be true. What's the catch? I do get that question a bit too. What's the catch? How is it supported? Are they going to take security over my assets? And I think you've touched on that previously.
Yeah, I'll give you the short ball on that one, Samara.
I mean, really, there is no real catch. I guess this is a product that's been around but hasn't been utilized for a lot of people, and we're seeing that to be it's more prominent now for clients to utilize us. And really, we're just looking to support companies and That's all we do. So because we're very focused, we're a little bit different than a bank. We focus on one product, and that's what we can do and provide, effectively. I think we got another question.
Yes, we have. Well, maybe one last question, then we'll announce the lucky door winner.
Yeah. So it says, oh, do you want to go ahead?
I'll just announce it. Probably either of us can answer. With Radium, can the R&D grant monies the grant funding can be used for any ongoing R&D project? So I think from your perspective, they can use the money for what they like, but if they want to finance against it going forward, they'd have to be used for eligible R&D. Is that right?
That's correct. Yeah. So if you want to use it ongoing, you'd have to spend it on the eligible R&D, but a lot of our clients just use it sort of one-off to manage their working capital or invest into their business.
Yeah, exactly right.
Okay, great. I think that's the last question. I guess just to announce the lucky door person, virtual door, as I say, we're still sat at home. It's here we go, Anna from Dresden Optics. Well done, Anna. We'll send the prize to you shortly. So thank you for joining the webinar today. Any further questions? Otherwise, we'll wrap up. Thanks so much, everybody, for joining today. Really. Oh, sorry, Phil's just come back. I meant to verify that if you have multiple projects. Oh, I think yes, you can use an R&D. So you can fund against multiple projects. It's funded. The R&D.
Yes.
Radium Capital can fund a claim rather than a single project.
Yeah, it doesn't need to be over a certain project. It can be over multiple different ones. It's really up to you. Yeah.
Okay. Hopefully that's answered this question. If not, Phil, get in touch. Okay. Thanks, everyone. Enjoy the rest of your day.
Thanks, everyone.
Thanks all.
Bye.
Stay well.
Cheers. Bye-bye.